In this video, we're going to be talking about DarwineX. For a lot of serious traders, they already know what DarwineX is, but for those of you that don't know, or the people that follow me currently might not know about it. So in today's video, I'm going to basically explain everything about DarwineX. So the first thing, it says we allocate investor and seed capital as you build your track record under our regulatory umbrella. So it's got two sides. There's DarwineX, the normal one, and then there's DarwineX Zero. So DarwineX, the normal one, there's a broker and you'll put in your money and you'll trade as if it's a normal broker. And what DarwineX basically does is it gives you a verified track record. So it's able to see the returns that you make, but also it sort of like copies your trade. For example, if someone invests in your, what is called the Darwin, they're able to now make the same returns as you. Obviously, there's a risk engine that they use so that, maybe you make 200%, maybe the Darwin might say you only make 30% because it's based on protection, which we'll go into. So we'll talk about the risk engine first. So we look here and it says your triumph as a trader is our mission. So the more profitable you are, the better for you, our investors, and ourselves. So what's nice about DarwineX is it's very different from the prop firm, because prop firms, generally most of the prop firms, they don't actually put you live. So they're not actually trading live funds. They're relying on the fact that, 90% or 95% of people fail. So they're going to pay you out through that method. Whereas in this case, when you trade and if you've got investor capital, they're actually going to put that in the live market. So when you win, they win. When you lose, they lose. So every month we allocate seed capital to the top strategies through Darwin IA.
So you earn 15% of the allocation. So let's say, for example, in this case, your seed capital allocation is $100,000 and you make a profit of 10%. So what you've made is you've made $10,000. Now, since you only receive 15%, you will receive $1,500 from that seed capital allocation. And I'm not 100% sure if they put the seed capital into the live market or not, but I know that when it's investor capital, they definitely do that. And then there's also attract investor capital. So that's where
People will come, they will put their money in and they can actually buy into your Darwin. A bit like a Bitcoin where you buy Bitcoin, it's the same sort of thing, except you are the index per se. Anyone can get in. I mean, if you want, the person viewing this video, you might not be a trader, but you might be interested in making some money from traders who actually know how to trade. So you can go here, invest in strategies, invest in Darwin, for example. So we click here, pick, diagnose, and combine uncorrelated strategies to diversify. And Darwin is a trading strategy wrapped as a managed index. So there's a risk engine that basically looks at this particular trader and they're able to look at the data and then they're able to ascertain how long their trades are, how much they risk, what type of asset, and they are able to use all sorts of statistical data to help them figure out how much they should risk when you take the trade. So when the trader takes the trade, let's say they put 3% risk on that trade, they might only put 1.5% or 0.1%, depending on a whole bunch of factors. So as it says here, controlled risk. Our risk engine controls investor risk at all times, independently of Darwin providers. You've also got fund protection. Basically, you've got insurance up to $100,000 when you are an investor. So as long as you are below that, let's say you only put $80,000 in, you'll get your $80,000 back because of this insurance. So think of DarwineX a little bit like a hedge fund. You pay a 1.2% management fee per annum that goes to DarwineX. So let's say you are an investor and you put 100,000 into Darwin, you're going to pay 1.2% straight up front, irregardless of what happens, whether it goes up, down, or break even. You're already going to pay per annum, in this case 1.2% of that 100,000 would be $1,200. So you'd be paying $1,200 before anything happens, and then 20% performance fee. 5% goes to DarwineX, 15% to the Darwin provider. So that's what's really cool about this, is that if you're the trader, you will make 15% of whatever you make for this investor. 5% goes to DarwineX. So in that same example, that investor who invested 100,000. Let's say that the trader makes 20% per annum. Let's say in that 1 year, this trader's made this investor 20%. 20% of 100,000 is 20,000. So that trader's made $20,000. Obviously, 80% is going to go to the investor. So 16,000 will go back to the investor, and then the other 4,000 will go to DarwineX and the trader. So 5% of that 20,000 will go to DarwineX, and 15% goes to the trader. So the only difference being is if the trader had their own hedge fund, they would take the whole 20%. So what DarwineX says is, okay, look, I'm providing this platform, I'm getting the investors, I'm doing all the marketing, I've got the regulatory umbrella, you don't have to worry about anything, we'll take 5% of what you make, basically. And DarwineX also get that 1.2%. Also, the way DarwineX makes money is through DarwineX Zero. DarwineX Zero is the same company as DarwineX, except it's a bit different. So DarwineX is for people who have got like €1,000 that they want to put into the broker that DarwineX uses, which I think is Interactive Brokers. And then if you go the DarwineX route where you just put your 1,000 into the broker and then you trade that, then you don't have to pay anything else. You just trade like normally with your broker, and then you've got a track record, etc. And you can also get investor capital. Now, the DarwineX Zero route is most probably for people who don't have or are not willing to put €1,000 into a broker. What they can do is they can pay €38 a month, and then they can just trade on a demo account. And then this allows them to have a track record. That's DarwineX Zero compared to DarwineX. I'm going the DarwineX. Within DarwineX, there's the Darwin IA Silver and there's the Darwin IA Gold. So when a trader starts trading, they will first be put in Darwin IA Silver until they get through. So let me click on the rules to see. Darwin AI is the monthly seed capital allocation program. So every month they allocate capital. So it's like a little bit of a leaderboard. So with Darwin IA, you have the opportunity to receive recurrent and cumulative allocation of seed capital from DarwineX. So the allocations are maintained during 3 consecutive months, but 6 in gold to incentivize responsible trading. Basically, once you get an allocation, you have it for 3 months, and you get 15% in performance fees on a high watermark basis. You know, you can't have your Darwin, let's say, up 10% and then you drop it to like 8%. And then let's say you make 3%, which would make it 11%. Your profits are only actually going to be that 1%, that 10% from that 11%, that 10 to 11. That's obviously assuming you've already been paid for that 10%. You've got the silver. The rating takes into account your current month's return as well as your cumulative return over the previous 5 months and your maximum loss over the prior 6 months. So that's how Darwin Silver works. And then Darwin Gold, your progress to level 2, Darwin IA Gold, when your Darwin has proven to be sufficiently robust in the medium to long term. For this reason, your monthly return is the only thing considered. With the Silver, it's taking into account what you have currently, your return this month and the last 5 months, and then also the maximum loss over the prior 6 months. Whereas once you get to gold and you obviously have a bit of a longer track record and sufficient return, then you get moved to Darwin IA Gold, where you'll get allocations depending on what your return for that month is. You'll get that. Let's have a look at Darwin IA Silver. So this is what the Darwin would look like, UEKR. So you get to decide what your Darwin is called. And usually you get, it's either 4 letters or 3 letters. So this one is UEKR, and this month their rating is 98.06, which is impressive. So this is the September competition. So by the end of September, if they stay number 1, then they'll get 375,000. We can see that their return for the last 5 months was 7.66%, and their return this month alone is 20.31%, with a maximum drawdown minus 4.27%. So as long as this person doesn't get beaten, that's what they're going to get. And then you can see number 2 is closely followed behind. FURC, 97.39. And if we look at their ratings, they had a return of over the previous 5 months of 9.05% and a return in September of 10.19 and the maximum drawdown of minus 3.46. And then you can see as you go down, obviously the allocation drops. And you can see it's massive competition, like 94.24, 94.30, like 0.06 different, gets you an extra 5K. And then as you progress down, see these guys get 85,000, 80,000, 75,000. And I believe as long as you have a rating of 75, you will get allocation. I believe the minimum is 30,000 allocation. So that's what Darwin IA Silver looks like, and that's how it works. So let me give you an example. If this number one gets the 375,000, they will keep it for the next 3 months, and then they will get paid after 3 months, depending on how much they make. Let's say in the next 3 months, let's say they make a total of 10%. That means that they've made 37,500 from this 375,000. So they would have made DarwineX 37,500, and then this trader would get 15% of that 37. They'll get like 5K over 3 months, something like that, if they made 10% over 3 months. But looking at this trader's return, they would probably make a lot more than 10%. What's nice is you can also look at other traders' results, and it allows you to be able to figure out how well you're doing. See, this person is first out of 7,520 traders, which is incredible. We can actually look and see when did they start this track record. They started in July, but that doesn't necessarily mean that they started trading in July. They might have traded before, but they only decided to start their DarwineX in July. So they got 2.8, 4.73, and then September was a banger. And then their total return so far is 29.53%, which gives an annualized return of 303%, which is absolutely incredible. The real question is, can this trader keep this going in the long run? Because as you can see, we're only looking at 3 months. If we look at other traders, like I think it's the THA, they have a longer track record, and obviously returns like this are not realistic. Sharp ratio of 15.87, which is crazy. If you look at it, a sharp ratio greater than 1 is considered acceptable to good by investors, and a ratio higher than 2 is rated as very good. A ratio of 3 or higher is considered excellent. Look at the sharp ratio of 15.87. Absolutely insane. Let's see the drawdown. Max drawdown minus 4.27%. Assets and time frames of this particular trader. Total trades that this trader's taken in 3 months, 334. So that equates to about 100 trades a month, 58% win rate, number of assets 10. So that's what's really cool, is you can actually look at the different pieces of data of different strategies, which is very helpful, because if you look at the best of the best, it allows you to see how well or how badly you're doing. Obviously, you don't want to compare me versus me, you versus you, but at the end of the day, it is good to have that as an idea. Now, when we move to Darwin IA Gold, you can see it's a lot different. Now it's based on the return. So you can see that this person, PUW, has the highest return in gold at the moment, 12.87%. So they are going to be getting 500,000 euro allocation, as long as they still have the highest return by the end of the month. So here, as you can see, it's all based on return. The lower the return, the lower the position. And obviously you can see 2.34% gets you 85,000 euros. And what you can see as well is there is a lot less participants in Darwin IA Gold, because obviously only the best of the best will get into gold. So there's only 173 compared to, I believe it was like 7,000 in the other one. So now let's talk about how I plan on using DarwineX. So I plan on using DarwineX to, number one, certify myself as a legit trader, certify a track record. It's also good because it gives me data that I didn't have before. And I'm going to be showing you my data as time goes by. Each quarter, each month, I'm going to go through it. And also with this DarwineX, it will allow me to attract investors and also to make additional income with the Darwin IA program. It's also good for me to be able to see my results against others. Again, as I said, you don't want to compare and compete, but it's good to use it to see where you stand. And that's the nice thing about DarwineX, is it's not based on luck, it's based on merit. So it shows you how good you are against the markets, but it also shows you how good you are against other traders. Because what the algorithm or the risk engine does is it's able to grab all this data from each of these different traders, and then it's able to standardize the risk. So you might be a trader who risks 1% and you might take 200 trades a month, and someone else might be a swing trader and they might risk 4%. So what it does is it standardizes the risk and the number of trades basically. So it allows you to do your return compared to another trader who may trade differently. So it's like comparing apples with apples rather than comparing apples with oranges. So it allows you to see how good of a trader you actually are. And with that, I guess we can end the video. In the next video, I'm probably going to analyze the THA strategy, which has been around for about 10 years in DarwineX, and we can go through the data and see what we can find.